1. How tariffs are changing cryptocurrency, stablecoins, crypto payroll and the future of finance. 2. Bitcoin drops below $108,000 as Trump's new tariffs shake markets, crypto news update. 1. How tariffs are changing cryptocurrency, stablecoins, crypto payroll and the future of finance. Tariffs and crypto, a new perspective. The financial world is undergoing a significant transformation due to the impact of tariffs. It's intriguing to observe how these tariffs are compelling businesses and individuals to reconsider their stance on cryptocurrency. As traditional banking systems face increasing pressure, digital assets like Bitcoin and stablecoins are emerging as viable alternatives. Let's delve into this shift and understand its implications. Stablecoins amid tariff turmoil, USD versus USDC. With the escalation of tariffs, particularly from the United States, fintech startups in Asia are increasingly turning to stablecoins such as USDC and USDT. Why is this happening? These digital currencies are pegged to stable assets, providing a buffer against the volatility caused by tariffs. Startups are leveraging stablecoins to protect themselves from unpredictable currency fluctuations and trade policies. But there's more to stablecoins than just stability. For instance, USDC is renowned for its transparency and regulatory compliance, while USDT is favored for its liquidity and speed. This trend is not a fleeting one. These companies are making strategic decisions to enhance their efficiency and position in a rapidly evolving financial landscape. Cryptocurrency as a safe haven, understanding crypto payroll compliance. As tariffs lead to higher import prices and potential inflation, confidence in fiat currencies may wane. This scenario is making cryptocurrencies more attractive as a reliable store of value and payment method. The notion that Bitcoin can serve as a hedge against fiat currency instability is gaining traction, especially in regions heavily impacted by trade disputes. Moreover, the challenges posed by tariffs are prompting businesses to explore crypto payroll solutions. Traditional payroll systems often face hurdles with cross-border payments due to regulatory constraints and high transaction costs. Cryptocurrencies offer a way to streamline payroll processes, reduce administrative burdens, and enhance transparency. This is particularly advantageous for companies looking to pay international employees in crypto, as it facilitates faster and cheaper transactions compared to conventional banking methods. Cross-border crypto payroll solutions, paying foreign employees in crypto. The shift towards crypto payroll is not merely a reaction to tariffs, it's a strategic move to improve global employment compliance. As companies expand internationally, they encounter more complexities with cross-border payments. Cryptocurrencies enable seamless transactions across borders, simplifying the process of hiring a global workforce. Startups are harnessing crypto payroll to address the challenges of international employment. By utilizing stablecoins, companies can ensure consistent payments to their employees, regardless of currency fluctuations. This not only simplifies payroll management but also positions businesses as innovative employers in a competitive job market. The future of crypto in traditional banking, crypto banking for startups. As tariffs and trade policies evolve, traditional banking systems are due for a reassessment. With the rise of cryptocurrencies, there is potential for a hybrid financial system where traditional banks integrate crypto services. This would allow banks to serve a diverse clientele, combining the stability of traditional finance with the innovation of cryptocurrencies. For startups, this hybrid model presents opportunities to access crypto banking services that can enhance their financial operations. By adopting digital assets, businesses can improve treasury management, streamline cross-border payments, and reduce their reliance on dollar-centric financial systems. Final thoughts: embracing change. In summary, tariffs are reshaping the financial landscape, especially for fintech startups in Asia. As economic uncertainty drives the demand for stable, alternative financial instruments, cryptocurrencies are becoming central to this new ecosystem. By adopting stablecoins and exploring crypto payroll solutions, businesses can navigate the challenges posed by tariffs and position themselves for success in a rapidly changing world. The future of finance is undoubtedly intertwined with the evolution of cryptocurrency, And those who adapt to these changes will be well equipped to thrive in this new economic reality. 2. Bitcoin drops below $108,000 as Trump's new tariffs shake markets. Crypto news update. Big shock for crypto fans. Bitcoin has slipped back under the psychologically important $108,000 mark just as Washington turns up the heat in its latest tariff offensive. The facts at a glance. Bitcoin, BTC, spent the weekend clawing its way to roughly $109,700, only to lose that entire gain during Monday's U.S. trading session. By late afternoon, the world's largest digital currency hovered near $107,700, about 0.8% below the 24-hour high. In simple terms, the market performed a complete round trip. But here's where it gets controversial. Many traders are pointing the finger not at on-chain metrics or exchange liquidations, but at the White House. What exactly happened? President Donald Trump reignited his tariff campaign, announcing fresh 25% duties on goods coming from Japan and South Korea beginning August 1st. Those two allies are not alone. Separate letters posted to Truth Social revealed the following planned levies. 25% on imports originating in Kazakhstan and Malaysia. 30% on products from South Africa. 40% on shipments out of Myanmar and Laos. Trump has also publicly threatened to slap extra charges on any country that lines up behind BRICS, the loose economic bloc made up of Brazil, Russia, India, China, and South Africa. The administration has moved the self-imposed deadline for finalizing new trade pacts from July 9 to August 1, leaving investors in a month-long window of uncertainty. And this is the part most people miss: tariffs rarely stay confined to the physical goods market. They often ripple out into currency valuations, bond yields and, yes, even the price of crypto assets as traders adjust their risk models. On Monday, the Nasdaq Composite and the S&P 500 each fell roughly 1%, while the yield on the benchmark 10-year U.S. Treasury note crept toward 4.4%, classic signs of a market bracing for slower global trade and stickier inflation. How did the rest of crypto fare? Ether, ETH, eased 0.6%. So-called altcoins like Solana's SOL, Dogecoin, Doge, and Sway's SUI retreated between 1 and 2%. In a rare bright spot, XRP bucked the trend, advancing more than 2%. For newcomers, price moves of 1 or 2% may look small compared with the double-digit swings crypto sometimes sees, yet in trillion-dollar markets they still represent billions in value-changing hands. Why do tariffs matter to Bitcoin anyway? Think of tariffs as a tax on cross-border commerce. When they rise, companies face higher costs, which can feed into consumer prices and slow economic growth. Investors, uncertain about future earnings, often shift capital away from equities and speculative assets. Bitcoin, although hailed as digital gold, continues to trade like a risk-on asset when macro anxiety spikes. That linkage helps explain Monday's red ink across the crypto board. Possible ripple effects. A prolonged tariff standoff could strengthen the US dollar by tightening financial conditions, putting additional downward pressure on BTC-denominated prices. On the flip side, some analysts argue that escalating trade tensions might eventually boost interest in permissionless money that sits outside the traditional banking rails. Two views, one market. Which camp do you find more convincing? Looking ahead. White House Press Secretary Caroline Leavitt indicated that more countries will receive tariff letters, or, in some instances, be offered fast-track trade deals, over the next few days. With each announcement, expect knee-jerk reactions not only in stocks and bonds but also across the crypto landscape. Your turn. Do you agree that tariffs are the main culprit behind Bitcoin's latest dip, or do you think crypto's weakness stems from internal factors like miner selling and ETF outflows? Could harsher duties ultimately push more nations toward the very BRICS alliance Washington hopes to deter? Share your thoughts and disagreements in the comments.